Hello traders, it's Sunday, October the 30th, and this is your weekly market review. Wall Street turned in mixed trading last week. Friday closed with a positive outcome from the advanced gross domestic product, but news surrounding presidential nominee Hillary Clinton created more nervousness in the broad markets, and the three major stock indexes declined. The FBI has announced it has reopened an investigation surrounding Mrs. Clinton. The news comes only a week and a half before the U.S. election for president. It is also jobs week in the U.S. with the non-farm employment change numbers on the schedule. Data did start to show signs of strength last week in the States via a good Philly Fed manufacturing index reading and better GDP numbers. And the U.S. dollar remains strong. However, Wall Street and the U.S. dollar could see fireworks if investors become increasingly nervous about the U.S. election, and this could mean volatile trading across the boards. The Nikkei index turned in good trading results last week with steady gains, and the yen grew weaker against the U.S. However, the Shanghai Shenzhen index in China struggled much of the time. Early on Tuesday, China will see the Manufacturing Purchasing Managers Index results. Also, the Bank of Japan will release their monetary policy statement. Economic conditions in Asia have continued to highlight that headwinds remain and growth continues to be challenging. Investors in Asia are known to be risk-adverse, and if U.S. markets become increasingly cautious, it could create a ripple effect in Asian equities and for the yen. European indexes mirrored the cautious results that came from Wall Street last week. The pound did start to show signs of stability, and the UK did manage to turn in a better GDP number. The euro whipsawed early in the week, but did manage to gain against the US dollar late on Friday as investor sentiment began to grow uneasy because of developments surrounding the US presidential election. German data did show some improvement last week, but the European Union as a whole turned in disappointing numbers, particularly from France. European traders are likely to be US-centric this week, and market conditions could prove swift. Crude oil could open with fast trading early on Monday, this because talks between the biggest oil producers this weekend, including OPEC members and non-members, failed to produce an agreement. Crude oil prices sank late on Friday and may continue to see volatility on production news. Gold climbed late on Friday as risk-adverse traders began to seek the precious metal. Fast trading is certain to be prevalent in gold this week if investor sentiment continues to remain nervous. Personal spending data will come from the U.S. on Monday at 12:30 GMT. On Tuesday, the states will see the ISM manufacturing PMI reading at 1400 GMT. The UK will release construction PMI figures on Wednesday at 9:30 GMT. Thursday, the Bank of England brings forward its official bank rate and monetary policy in the UK at 12 o'clock GMT. On Friday, the U.S. issues the always important non-farm employment change statistics at 12:30 GMT. Visit us every day for our daily reviews, trading tips and tactics, and analysis reports. We wish you a great week of trading, and thank you for watching.